I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are basically flat ahead of today's key Fed meeting. Everyone will be listening for talk about potential QE tapering. But what do you think investors are expecting to hear?
Wait, what's today?
Fed Day, you didn't know? No one's
Wednesday.
talking about it, I know.
I thought it was Hump Day. It's Fed Day. Okay, so Wednesday. All right, so we're combining a lot of worlds here.
Yeah.
All right, so with that said, I think you've heard across the board everyone's opinions on what Uncle Ben's going to do. Is he going to keep the stimulus? Is he going to keep the punch bowl? Is he going to take his foot off the gas or press the gas? Bottom line is the market's going to let us know what the next movement is. And at this point, I think it makes sense for them to taper a bit. You know that last time he spoke on that May 22nd outside day, he talked about the potential of tapering because you can't have $85 billion worth of stimulus every month forever. So he did float out there that tapering can happen. I personally think the way the market's acting, he can do it in the fall and we can handle it. If all of a sudden market falls apart come the summertime, we break the double bottom on the 50-day and the market's careening lower, probably goes to 2014. But my guess would be that, he talks about how the strength in the economy is there, that they're still watching. They're not happy where everything is, but maybe come the fall, we go from 85 billion down to like 60 billion or maybe 55. And
what if he does not say that? What can he say to derail us?
I guess if maybe the summer or talks about more than that or some extreme versions of tapering, which I don't think he's going to do. But ultimately, we're still only like 2.5% off the highs. The biggest pullback in 2013 we've had is 5% off the highs. So, the market's acting very well. And I don't think today is going to change that monumentally. I think that we're getting a lot of opportunities for every time frame if you're a macro investor, an intermediate trend trader. And there are also setups for the active day trader who doesn't want the overnight risk as things trigger. So ultimately, a lot of people look for reasons not to be in the market and all the negatives, but I think there's a lot of reasons to be in it once you get a process together.
Well, why don't you show us the key levels in the S&P before we dive into some of those potential names?
That's something else we haven't shown, right? the upper wedge pivot pattern with support and resistance, which is really what you need to focus on versus everyone else's opinions out there. You look at the chart here and you will see, look at this trend we've had in place since November. We touched it once here, all of a sudden didn't touch it again until April where we held the 50-day moving average. That was the outside day that we spoke about when it pushed through and failed, a spot to perhaps get rid of some excess longs, take off some risk, get a little net short. Then remember we talked about this upper wedge pattern coming in here where if we were to break below 1640, we could see a move down to the 50-day, and that's what transpired. Hit the 50-day, bounced off it, retested it last week, held. We weren't sure if it was going to hold last week, and it did. Then ultimately, the last 2 days, we broke above this downtrend. I think, today you need to watch this 1640 to 1642 area. I'm sure a lot of technicians like myself, let me get this little thing off of here, would like to see us hold this, okay? You don't want to see, a breakout of the downtrend for all of a sudden getting engulfed, with what, could be, I don't think that happens, but you have to have that out there. But, I would say here is, again, 1642-ish to 1646, and then you have yesterday's high as resistance, and then you have here 1662, 1674, and then there's the high there. But ultimately, you're seeing a lot of action, getting going, or a lot of breakouts happening, which we haven't seen in a while, even before the Fed's testimony. So leaders are actually leading, which is what we like to see.
Right, and before we get into some of those leaders, we did talk about getting exposure to Japan when it was about 20% off of its highs. Is that sort of off the table now? Did traders miss their opportunity?
I think that the snapback, Thursday night I was on CNBC World Markets and we talked about, with Japan 20% off its highs, with the BOJ, like don't fight the Fed, don't fight the BOJ, that they've been in a 2-decade-long base, or we talk about our lost decade. They've had 2 decades, and they were the first, out of the block, way back when. So anyway, with being off 20%, we just talked about opportunity and how to play different areas. And if you didn't chase up 50% from November, that why wouldn't you look to potentially buy something down there? Or, if you were waiting or you sold into strength, you had the luxury. Well, anyway, Japan is 7% off those lows. So, bringing some stability back to the overall markets where, maybe that is a new pivot low and you could look for other opportunities there.
All right, well, as you mentioned, there are some stocks acting well out there right now. Tech names continue to show some real power and commitment. And of course, one of the biggest names in that sector to mention is Google. It closed on highs yesterday. We know the stock has been doing really well. Would you perhaps buy on pullbacks?
I think I'm going to have to now, because yesterday I put some offers out there and I sold it. I had a nice 2-day trade there. We talked about the pattern. There were 2 different patterns in Google to get involved. You go look at the chart here, you will see that this was the buy the dip. When it broke below key support, came back above it, your classic red dog reversal. Then it broke this descending channel here, hit some resistance, pulled back. There's your retest. And then this is when you had your nice little 2-day move. So when the market going up, it's good to see leaders get involved. And you had 885 as a level. Once it cleared this 891, it gave you some more power, another $9. And now, I do think that, we continue in this stride and 1640 holds in the S&P and no curveballs. This should be one of the first few high beta names back at new highs. It looks good.
And how about Amazon as well? We always talk about Google and Amazon as the standouts in the group. Is Amazon also on its way to new all-time highs?
Yeah, or it looks like. And we change. Like traders have to change based on market complexion and what type of relative strength we're seeing. And recently, Google's actually been a standout all year, but Amazon's been very wishy-washy. And I've had a lot of problems trading Amazon in the past because I always didn't understand the PE, and every earnings that came out was kind of like a discount where they gave it a pass. But recently, at least technically, it made some sense. You look at the chart here of Amazon, you'll see this was about a week ago. We talked about the opportunity when it broke this downtrend around 272 to 275. That was a great 2-day trade, which went to the prior high here, which was what, 284.50. Then you had your either buy the pullback if you missed it, or when it broke back above 278. Now here it is, right back at historic highs. So maybe we get an inside day the next day or so, maybe we don't, but ultimately if it starts getting through, this 282 or 283 to 284.5, this might even beat Google to the punch, and that's a historic high, which shows you that, even if you're a stock picker, okay, you could catch things and follow trends and really build some wealth for yourself besides doing monthly flows or besides day trading or besides following an intermediate plan. All the things that can provide opportunity if you look for it and not follow the fear mongers.
Right. Well, also acting well as of late is LinkedIn, which reclaimed its 50-day yesterday and closed above it. So do you think it's getting ready for a more ignited move to the upside?
I think now I'd like to see it go sideways. Ever since the last earnings report, it just got overheated. It was over 200. We've been talking about it as one of the 3 amigos, as a new issue that could provide a lot of opportunity besides more than a trade for well over a year. And now, it's been choppy, it's been a little wishy-washy, there's been a lot of micro trades. That was the earnings report that wasn't enough, came in, here was the break of this like upper area, and then all of a sudden it broke this support, and now look where it is, it's back up into the space. So ultimately I think, maybe you just draw a bigger channel here, and you now have big support at 160. You take out the earnings, so here's your channel, and now it's in the upper end. I don't think it's a compelling trade here, but there have been some nice trades along the way, but there's still, if you're a macro investor and you've been holding it, since a few months after the IPO, you look at the weekly chart again, and you will see that, it is building an upper level base. This was the last time it broke out, and now, it's just seeing some sideways trades, so you could probably still sit in and now use 160 as your point of reference.
All right, and how about Netflix, which did take a break yesterday, but it's still holding above its huge gap. So you think upside momentum still intact?
Yes, and at least now we have a gap to trade against. You had that, again, red dog reversal, which was that bounce last week. If you look at the chart here, the beauty of playing a stock for a setup is you don't need to know what's cooking there as far as, a deal like you saw on that content deal. All you know is that here, okay, Netflix, if you were looking for a way in on Netflix, he was at 80-20 trade right at the 50-day. Okay, so that was your entry. If you bought it at 106.87 and said, you know what, I'm going to put a stop in at this low here, 205.75, whatever that was. So anyway, it's a dollar risk, and you held it. Look how rewarded you were on that news. So now you have a gap here, which it's holding. So with a little bit more sideways action, a little bit more commitment to this gap, we could get another trade once it trades through 231. But ultimately, this huge gap is intact. Now you have another one. At least you have some points of reference, and Netflix continues to lead.
And SanDisk, we mentioned on Monday as showing relative strength. It cleared resistance yesterday and looks like it could keep going. How much room does it have to the upside?
There are setups, and right now this one to me is going to be on its third day, so I don't think you initiate. But what was important here is seeing that on Monday something could break out with power. So when you see a breakout with power, you typically know that the market's constructive. And if you look here at the chart here, we had it in off the charts a few different times. One time I know when I tried to play it, just shows you that sometimes your timing is off. It broke out and failed, and I got away from it, and I think I lost money that day. And then look what happened a few sessions later. You had a small little wedge pattern here, broke above that high, and then yesterday gave you some follow through. That's what traders love, follow through. So ultimately, this type of action is showing me that the market's going to hang around, and we're going to be in the same trend, and you just have to keep looking for key stocks at key areas with good price patterns.
All right, coming up, we're going to go in the trenches with the banks. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
The banks look like they could be resetting up, and this could be a group to watch today for clues about the market, namely Goldman Sachs, where the pattern is getting pretty tight.
Yes, you don't always get tight patterns in Goldman, so when you get a tight pattern, and this could give you clues on direction, I always get excited. So if you look here at the chart of Goldman Sachs, you will see, after this corrective phase you saw in February, gave you a nice descending channel to gauge, broke above it, and then that 151 was key. Went to highs, and now look how tight this pattern is here, guys. Okay, that's great, because this could give us points of entry. So right here, if Goldman Sachs starts getting above 165, 166, that could help ignite this group. If it, yesterday it didn't really participate. A lot of people were pointing to it. Oh, look at the weakness in Goldman. All I know is I think it was just trying to get tighter and consolidate. So if it were to go below 163 to 161, perhaps that would signal some type of selling pressure. But at this point, I think they're more set up for upside. I'm not in Goldman. I'm going to wait and see. But ultimately, very, very tight. Watch this pretty closely.
So if the group does get a boost, then maybe Morgan Stanley is one to keep an eye on, because this one has been showing some relative strength.
Yes, and as I look through all these patterns, there are just so many different wedges there. You could pick and choose which one you want. You look at Morgan Stanley also, this one has been acting better ever since this nice gap up right here. And you could look at this trend line where it's been holding the 21 day. So here you are with this one too. Nice, tight pattern. So this one, that level is about 2650. So I would watch as you see Goldman start going. Maybe look at this one if this hasn't gone yet. But ultimately, these all have very tight patterns. So at least with tight patterns, you get to figure out which way they resolve with points of entry. And
JP Morgan also trading in an upper wedge as well.
Yeah, it's like I'm trying to look at which one's different, and they're all pretty similar. So that's good. For traders, that's what you want. You want strong groups, tight patterns, so at least you know how to maneuver it. And if you look at the chart, the chart pattern here of JP Morgan, this too, not too different. This starts to get above 54.26 and stays above it with some volume, that could ignite. You look at Wells Fargo, same thing. Looks like if it can get above this level here, which is about 41.06, it can go. And then lastly, Citigroup, let's just get them all going here. This one looks, I guess, a little bit weaker. This first level here is about 50.40, and then it can go. So ultimately, lots of tight patterns in the banks, and typically the banks do get action. Sometimes before the Fed, they start to go in the morning because they want to squeeze the market before Big Ben makes his statements, or they get stronger after the Fed, which gives you clues that we could have a decent close.
I do think we left one name out, Bank of America, which did break above its 8 and 21 day yesterday, so maybe continuation today.
Forget my go-to name. Jesus,
couldn't let you forget it.
thank you very much. Anyway, that's one I own, actually, and here you go. So see, I don't always talk about just things that I own. So above 1340-ish, I think this gets going. Last time we had a nice trade here was right around this 1240. It's put in a nice consolidation here, trying to turn up. So we'll see what happens there. Bank of America, at least, you see the housing numbers that came out, and Bank of America does have a lot of exposure to mortgages, so maybe it's a little bit of a bank/housing play. So, we talk about $16 or so by the end of the year, and I still think that guesstimate is intact.
All right, let's do some quick hits here and talk GE, which broke out on news of its deal with Amazon. Where do you think we could get some continuation to the upside?
I think, GE, you rarely get like 2-3 powerful days in a row, but yesterday, again, GE was something constructive to see that a behemoth, behemoth, meaning big, mega behemoth like this could break out again, which shows you overall health and shows you that you could look at patterns. Look at GE. Nice tight pattern here. I think someone in my Twitter sphere, showed me it a day or two ago. So when it started to go, yesterday I was away from my desk. I actually picked some up and, it closed near the high. So I would say maybe a little digestion, but then if it were to get through 24.45, it can continue. Maybe we have to go to the weekly chart to look at GE. Oh, look at that. Maybe we have to go to the monthly chart of GE and see that at some point, I think this can continue, maybe even almost close to $30 at some point in the next 6 to 12 months.
And Visa flagging above its 8 and 21 day still, so still on your radar for a potential breakout?
This one, I for some reason, it always gets me. Maybe it doesn't make highs and go. Who knows? Whatever. Don't worry about me and my history with Visa, but the history with Visa is strong, and it did try and break out yesterday. If you're in it looks good still. Stay above yesterday's high. It can continue. You want to see if you could be a stock picker. Well, if you were a stock picker in Visa, you are not upset. This shows you that equities here are far from dead. That's how you catch a multi-bagger, a new issue. This thing came public, 2008? So about 5 years ago. Here was when it broke out of that range of 3 years. Look at the move there. It can be done. Learn how to do it.
And we've been talking a lot about Hewlett-Packard, and it's set up for a breakout above 2550. Is this still the level to watch?
Yep, and this one, I remember the last move I kind of fought, and then finally it corrected, and now it's reset up. You look here at Hewlett-Packard, some guys are having some whatever performance there. 25.55 is that level for it to keep going. I think there's a trade there still.
And Toll Brothers got a boost on the better than expected housing market index number. What are the levels you're watching there?
This one just, again, a lot of the home builders were weaker well before the market, even our markets, or the S&P hit the 50-day. This one is bouncing off. I think that a lot of these things still need more work, which I'm not exactly sure why, but it did reclaim the 200-day. You do have some resistance right here. If Toll were to start getting above, just say 34.35, it can continue. I think the group XHB, is a strong group, and look how it held the support line coming all the way down and had a nice powerful move, but right around this 32-ish, it probably sees a little bit of a rest before it tries to make new highs again. Maybe that's later this year.
All right, and lastly, Tesla, which has been acting better, now just news of a recall that's going on there. Could that potentially weigh on the stock today, you think?
Well, you've been seeing it a little weaker this morning because everyone's sending it out. Big recall, this, that, boom, bam. Meanwhile, it's 800 cars. And he says it'll be done within a week. It's a bracket. So with that said, if you're a long-term Tesla fan, don't let it bother you because all the naysayers out there will come calling. If you're a short-term guy like me, I am long some, overnight, it's down a little bit. If it can go positive, I will most likely add. If it could break above this, you look at the chart here, above this 104.76, which is the reason why a lot of us went, long it probably overnight because it did hold in there well, then the shorts will really be in trouble. If it does weigh on the stock and it breaks and closes below 99.20, I'll get out of it for now, and then I'll see if it can hold the 21-day and see if this trend can continue. So overall, I think today will be a good testament on how strong this stock is because a lot of people are going to try and beat it down today.
So what will be your strategy heading into the trading session? Will you be relatively hands-off heading into the meeting?
Well, not really. I have Monday, I went back and put on some positions. Remember that roller coaster day? I think I went back to 4 or 5 longs with a short. And then yesterday I was out for graduation, a little pre-K graduation, and a lot of things triggered. And then I think I have 5, 6 longs on one short. So for me, I'm going to figure out, can these patterns stay intact? So I'll trim and trail. Like yesterday, unfortunately, I got out of Google, but that was a nice 2-day trade. I'll see if Amazon could break above 284 for an extra trade. I'll see if Tesla can go positive. And then, I'm not in that heavy of the banks. I think the banks with this flat open could give you opportunity, both directions. But I'm kind of leaning to the long side there. So if it happens on the long side, I'll probably be more aggressive. I'll watch Goldman, I'll watch JP, I'll watch a lot of those banks. And I think that we're above that downtrend line in the overall markets. We've been talking spiders, so let me quickly show you the spiders, the level here. So I would say the longer we now stay above this 164, just say even 50, use that, be a little bit conservative here. Really the level is about 165.20 to 165.60 where we broke out above. I think, the more money should come into the market because they're going to feel like they have to. And the more shorts that thought we were going to break the 50 day that maybe didn't cover yet might get squeezed, and then all of a sudden there's the old high there of 169.07.
And with that said, happy trading, everyone. Have a great Wednesday.